Will we see record low interest rates in 2024? Jerome Powell, the chairman of the Federal Reserve, announced that he will be cutting interest rates 3 times in 2024. Stick around to the end to find out what my thoughts are on this process. Now, let me preface this. Interest rates from the Fed does not include mortgage interest rates. However, it has an effect on mortgage interest rates. And once he made that announcement on a Wednesday, we began to see the market improve and interest rates have been dropping significantly over the last 2 weeks. So if you're new to the channel, do me a huge favor and give me a thumbs up. And also, we have a Facebook group. If you would like to join our interactive Facebook group where we have contests and different things and trivia, please do me a huge favor and subscribe. The link for the Facebook group will be below. So back to interest rates. So with interest rates starting to trickle down, obviously there are more people who are now interested in purchasing a home. Meaning that right now interest rates are declining. However, they're still not in the 5s. We've seen some 7s. We saw some 6s, depending on your credit score, what program you use, and how much the house is in location. However, we are seeing a downward tick of interest rates. What does that mean? That typically means more competition for buyers. Example, when interest rates were in the 8s, high 7s, we were seeing offers being made, but it may have been 1 or 2 offers, sometimes only 1 offer. In that case, particularly in this market, we were seeing sellers contribute to closing costs, contributing to 2-1 buy downs, possibly some price reductions. Right now, we're seeing some of that. However, if in 2024, when the Fed makes their cuts, and they said they probably won't make them in January, we'll probably see them at the end of Q1, which is March, we will start to see more people come into the market because rates are lower. And what that means is more competition, prices being stiffer, sellers being able to start to get what they want. And in some cases, housing prices could go back up in the opposite direction. Creates a spending frenzy. And what we need to make sure that we understand is that because interest rates are declining or decreasing, that does not necessarily solve your problem, right? So if while you were waiting for the market to crash or for interest rates to go down, if you didn't work on your credit score, if you didn't pay down debt, if you didn't start to save money or figure out where you were getting funds from, lower interest rates doesn't help your situation. However, you do have some time, right? So if you are looking to purchase a home in 2024, here are a few things that you need to get ready for. First thing you need to do is speak with the lender. By speaking with the lender, you will get to ask questions about how the pre-approval process works, what's needed from you, and then I'm going to tell you, forget the hard inquiry. Yes, don't worry about the hard inquiry. You need to have your credit pulled so you're in position. 0 to 5 points is not going to hurt you significantly. The credit pull is nowhere near like a car credit pull, right? You want to make sure that you're in position to purchase. Having that hard pull is way better than the soft pull. And by doing that, you have a game plan on what you need to do. If you're in place and you don't need to do anything, you already know that you're prepared for when it's time to purchase. If you need to work on some things before the spring or before your lease is up, a lender can provide that information for you. After you've spoken to the lender, here's a few things that you will have. You will have a better understanding of where you're at, how you need to get to where you need to be in order to purchase. You'll have a good idea of what you can qualify for. You'll also have an idea of how much money you need to bring to the table, along with, do I qualify for FHA? Will I qualify for VA, USDA, conventional? Do I need to do a bank statement loan? So you'll have a grand picture of what you need to qualify for or what you need to do to qualify for. Listen, again, don't worry about the hard inquiry. And this is why I'm going to say this again. When you do a soft pull, no, it doesn't show up on your credit, but it also doesn't show us everything we need to know about your credit. So you could pull your score up and it still not fit that need to qualify for the program, because remember, rates got higher, the market changed, and because they didn't want to see as many defaults, FHA, USDA, VA, and conventional, they tightened up on their requirements of what they were willing to accept. They wanted to see people with decent credit scores. They wanted to make sure you had some assets, which means money, down payment, closing costs, reserves, if needed. Is the money coming directly from you? Are you getting a gift from a family member? Is it coming from your 401k or IRA? Do you already have it in the bank? Are you participating in the down payment assistance program? Are you trying to get funds from a seller? All of those things play a huge factor in whether you can get pre-approved if the pre-approval goes through. The hard inquiry allows for us to pull all of that data, and it gives lenders a better picture of what you can qualify for. Because what you don't want to have is a pre-qualification. You want a pre-approval from a lender, and a solid pre-approval where they have taken a look at your documents and telling you what you can get. And also, in certain cases, credit score does have something to do with the interest rate you have. However, without a hard pull or knowing where you need to be, you want to make sure you prepare and have the strongest credit that you can have going into it. So when you go and make an offer, you're making a solid offer with a solid pre-approval. If you are new to this channel and you have not subscribed, please do me a huge favor and hit the subscribe button. It doesn't cost you anything to hit the subscribe button. We appreciate it. So at the beginning of the video, I said stick around to the end to find out my thoughts on if we'll see record low interest rates. I don't think we'll see record low interest rates. However, I do believe that lowering the interest rates will have high competition. I do believe that we will see interest rates go back to the norm, 5.5. With that being said, you just want to make sure you're in position. If it gets to the 2s or the 3s or 4% interest rates, that's great. However, you still want to make sure in any situation that you can actually qualify for the mortgage and afford the mortgage. What you want to make sure you talk to your lender about is that what you qualify for based off of their calculations and what you can afford are two different things. Now, within reason, you're going to want to be able to have an affordable mortgage, right? You don't want to say, I want a $500,000 house, but a $1,500 a month payment. That doesn't coincide. However, you do want to get a mortgage where you can afford it, because the goal of the mortgage lender is typically to continue to service the loan. We don't want to see anyone to be foreclosed on for any circumstance. And when we look at a file, we want to make sure that we're partnering with a person who has the ability to maintain the home for the full 30-year terms. And even if they run into a snag such as a short-term job loss or something happening, that they have reserves, they have funds, and they have the ability to continue paying for this house. If you enjoyed this video, again, give me a huge thumbs up and do me a favor. It costs you nothing to subscribe. So please subscribe to my channel. If you enjoyed this video and you want to know how much house you can qualify for if you make $50,000 a year, click on this video above.